Hi guys. Yeah, I'm just having this video to show why market profile, why it is important, what is order flow, why it is important, and why you should trade into the market using market profile and order flow. So I'm not here just to do the promotion, but it is the thing that helped me in my career to grow in my trading career, and definitely to be kind of a the one who can carry the options or the position with the conviction. Order flow and market profile helped me a lot. So let's start with, first of all, what is market profile and what is the order flow. So what is market profile. So in the market profile, you see there are around uh, 13 sessions of 30 minutes each, and the last one, 12 session with 13 minutes each, and the last one is for the 15 minutes. And these sessions are divided into multiple, what you can say, they are named as A, B, C, D, E. So the first session that runs from 9:15 to 9:44 is known as session A. Then the session which is from 9:45 till 10:15, which is known as session B. Then you have 10:15 to 10:45 session C, and so on. So every 30 minutes is represented by a alphabet, which is A, B, C, D, which is still A to M. And the M session is for 15 minutes, which is 3:15 to 3:30, and when the 3:30 market closes. So this is how in the market profile these sessions are brought into. So we track the 30 minutes activity on the market profile charts. So if you see, this is my market profile charts. If I now squeeze it out, this is how the market profile charts. And market profile charts has three basic things. One is which is known as POC. Second is known as value area high and value area low. So what it means, so value area high, value area low, this is the area where in a day 70% of the time the price has been traded. So this is a kind of a important level. And what is POC? POC is the area where the maximum number of letters have been crossed. So for example, now if you see, there are four letters that cross, so this POC is here. So you can see in earlier where the POC can be different. So here, for example, if you see, if I unsplit it, you see the whole day activity was running between these two, value area high and value area low. So POC was touching almost every letter, but in this case POC was not touching all the letters. So this is how the POC is calculated. So these three are very important levels. So these three are acts as a kind of a support or kind of a resistance during the market hours. Okay, so this is how the market profile chart looks like. And then you have a single prints which came in between. Then you have some anomalies in the market, and here if you see, this is the order flow, kind of a the volume that you can see, also kind of a chart where you see at what price the highest volume was traded. So for example, in this level around 17,190, there was a huge spike into volumes. Yeah, if you see this level, only very few contracts got traded. So this is how it will show you a holistic picture about the nifty, the trades. And let's say, same, if you see now bank nifty, again same view, 13 charts. And this, if you go for the stock also, this is the same way the chart looks like. So this is for the HDFC bank. If you see for this is for Bajaj Finance. Okay, this is for GMR. Any stock you can take, anything you want to take, this is how it will look like. So basically, working on the 30 minutes activity, basically for Nifty and Bank Nifty. Okay. And what is order flow? So order flow is like, it is a kind of a mirror to the market. So it shows at what level, when we open in the morning, at what level, what number of contracts got traded on which side. So either buy or either sell side. So for example, I'll just show you. So this is my first A period, this what I we said. So if you see, this red is sellers and this green is buyer. So we opened somewhere, then we came down till this level, 14 50,499. And here you see, okay, somebody sold 11 contracts at this level, somebody sold 237 contracts at this level, somebody sold 126 contract at this level. So at each and every level, what kind of activity is happening, how many contracts are getting buyed and how many contracts are getting sold. So for example, at this level, 40,574.90, there were 487 contract got buyed and 312 contracts got sold. So this is how this order flow will show you what is happening, at what level, how many sellers are there and how many buyers are there. And then you have this cumulative delta feature which will show you for that 30 minutes range, what is the who was the heavier, it is a seller or it is a buyer. If it is a seller, then we see this and the cumulative delta number as negative, and if it is a buyer, we see that cumulative delta numbers are positive. So for example, in this case, for the A session, you see, effectively cumulatively, so if you add the sellers and the buyers together, there were 959 sellers were more than buyers, so 959 contracts were more sold than what was buyed in that 30 minutes. Okay, so this will show you what exactly the activity is happening, and we don't need to do anything. The software will start printing these numbers as the price will move along, so you don't need to do anything. It's just that you need to do the setting one time. Once your setting is is there, you just see the numbers that are getting printed, so there is no brain that you have to apply. It is all auto calculated, this cumulative delta, sellers number, buyers number, and all. And what you want to do then, what is the use of this? So you just need to see, when the day is progressing, you just need to see what is happening during the day. Are sellers heavy, are sellers more, are buyers more, or they are equal, or there is no movement, there are no big sellers, there are no big buyers. So then the market would be in, in a very sideways range. When you have a big seller coming in, you will see there is a big downside movement coming in. When you see the numbers where you see somebody bought, let's say, 5,000 contracts, what will happen? The market will go up because somebody bought 5,000 contracts, and you can see these numbers only on the screen. So if you see that, in this bullish thing, there was a 5,000 contracts buyed at this level, what you will assume, okay, that level is very important and somebody big brought 5,000 contract there. So this can either be, you if you are trading, then you can keep this level as your stop loss and just carry your trade. So this is how you need to do. You don't need to apply much brains here, no indicator, not much. So for example, I'll just show you what happened, in this day. So example, if you see today, bank nifty started at around 40,000, 8850 around level, and it went down till 39,572, so around 1300 points fall in a day in the bank nifty. Now imagine the puts would have been minimum 4 to 5 times during the day, correct? So if you have bought a put of around 150, 200, it would have been definitely went through 700, 800 rupees. Okay, so this is how powerful, this down move was. But then how to enter in this move? So you don't know any technical, you don't know any technical charts, okay, I assume, but you can read the numbers, right? We all learned the numbers from the in our from our primary school. So if you see, somebody at this level, 40,437, somebody sold 1,500 contracts. Now your eyes and brains and ears are all open, because somebody big is came in the market and he started selling. And if you see against that level, in that level against him, there was no buyer, so it was zero. So somebody sold 1,500 contracts. Now it's huge, 1,500 contracts. Okay, so your view definitely, it became bearish. So you don't know what has happened, but somebody sold. Why sold? I don't know. Who sold? I don't know, but somebody sold, right? I don't care, somebody sold. So my view should be, I should be with his side, because he seems to be bigger player. He seems to be having big money to sell around more than 1,500 contracts of a bank nifty, correct? So think about it. You and me or retail player can't sell it, somebody big has to sell. So this is my view started. And then I'm see the day progressing, and in few as we progress along, okay, we saw some buying happening, then there was some selling also, 1200 contracts, 1300 contracts, all going well and good. But when the day progresses, you see somebody sold 6500 contracts, and there was no buyer against it, just 31 contracts. So you see this level 40,377. So let's go and mark this level in our chart: 40,377, 40,377. So around this level somebody sold 6,000 contracts. What should be your view? Yeah, I think it's natural just to buy puts, or just to call short the calls, or just to sell the future, because somebody 6,000 contracts at one level. Who can do it, man? It's only somebody who has big money, and he might have been an institution. I don't know if he would be, but somebody big who knows something. And I just, we just carried our puts. We entered, in a big quantity, because I just want to be with this guy who is having this info. I don't know who is this guy, but I just know that he sold, so I'm just selling with him. And if you see whole day, this number got never breached. We just have 10 points move above it, but nothing else. 377 went to around 392, just 15 points above, and then we had another seller above. So we knew that okay, there was a seller here also around this point. So we just got it. Now when we entered the trades here, it was around, it was around 12:30 or so, or 11:30 or so. And now just look at the movement. My puts, you know went crazy. My puts went from 200 to 800 in this trade. And if you have a large quantity, you can just carry, just sit, with this guy who is the bigger guy who is just sold. So this is the very simple way to analyze the market. This is the very simple way to look at the markets. You just need to carry. And now, why I carry? Because if 200 put went to 400, I can go and just book my position. But why I kept it, to carry, just because I know somebody very big is selling. And if you see, my cumulative delta started increasing. So it was 316, then 900 contracts got sold, then cumulatively, as I told you already. So then 2700 contracts, then 3000 contracts, then 7000 contracts, then 9000 contracts, 11,000, 16,000. If you see my screen, 16,000, 18,000, 21,000. So you just carry, because somebody big sold these contracts, and you just carry till end of the day, and you just close your position at the end of the day. So this is how you can carry with the conviction. So you don't need to see much worried about, okay, what is happening in the 5 minutes candle. If the candle, there is a green candle, there is a red candle, there is a if it is coming to super trend, not super trend, whatever indicators you are following, if it's coming to 5 ma, 5 dma, whatever. So this is all there. But this will just show you the simple way to trade. Anybody who just know, who can just look at the numbers and take a decision, can trade in this market using this order flow. How powerful this is. And then one step above, if you understand the strategies, if you understand technicals, and if you combine your technicals with this numbers that you can see on the screen, how much quantity sold, where it is sold, how much at one point got sold, if you get this data along with your with your technical knowledge within intraday, you can make a huge amount. Okay, so this is the order flow, and this is the market profile. Very basic video, very very basic, no strategies, nothing, but just to explain what it is, how you can trade about it, and how you can take the informed decisions. So that's it, nothing more. But yes, if you are really looking for learning about it, definitely go and learn. I will just recommend it, because this is the simplest way to trade the markets I have seen in my 10 years of career, trading career. Okay, this was just the informative session. If you need anything, please reach out to me. Have a good time. Be passionate about the markets. This is my the lines that I love to say. Be passionate about the market, and learn. Happy learning. If you learn this, I think if you master it out, you can do magics. Thank you for watching. Bye bye.